Welcome back to the Exploring Growth podcast. I'm so glad you're here. In this episode, I discuss partnerships, strategic hires, and common mistakes companies make when they're trying to grow. My guest today is Terence Channon from Salt Mines Advisors. I hope you enjoy. All right. Hey, Terence. Thanks for being here.
Hey, Lee. How are you? Thanks for having me on today. I appreciate it.
Yeah, definitely. So I'm all about getting to it, adding value to our listeners. So let me give a quick introduction of who you are, so they can kind of have some context. And then let's jump into our conversation. I think it's going to be a rich conversation today. So Terence and I have known each other for a long time. We actually went to school together at Stetson University. And we just finished up a small consulting project together, and we got to talking like, I think that you really add a lot of value, a lot of insights on startups, especially, but small growing companies that are looking to scale. So, I brought Terence on. You make the call. I think he's got a pretty extensive background that can add value. So let me tell you about Terence. So very extensive background in the startup world, starting his first company when we were in school, doing very well with that. He served as founder and CEO of a publicly traded company, was also an early stage employee of a venture-backed enterprise that experienced a $100 million exit. He's an angel investor and currently owns two companies. Which is a technical and professional service company. Technology and professional service company. And the other is his latest venture, Salt Mines Advisors, where he helps startup founders, employees, and investors make informed decisions about money on both the business and the personal sides as they're getting going. So Terence has a wealth of experience and a wealth of knowledge, and I'm very excited to have him on today. Welcome again, Terence.
No, thank you so much, Lee, for that introduction. I don't know if I could say it better myself. I feel very, very important and accomplished hearing it. When someone says it, sometimes I think it's easy to overestimate, how well we've done. I think most people think they're above average, right? And it's probably not the case. Right. But hearing it from someone else, I'm like, wow, certainly I felt proud, but also I think it covers it, and certainly. I would like to add, amidst all, these accomplishments, at least say, a lot of learnings, a lot of knowledge, and also a lot of, difficult times and even just outright failures to get there, which is, all part of the story. So that, maybe as the conversation unfolds, we'll get into some of those a little bit.
Yeah. Well, it's good to hear it back sometimes because you forget just how much you've done. I mean, what are you, like 43, 45? 44?
Ooh, 42. I hope, is that 42? On purpose? But wow. I'm certainly feeling good. I'm feeling good about that, right? I feel good.
42, and you've already accomplished all of that stuff. I mean, that's what I think is so great about your story is if we could have a little peek into your history, it's probably a roller coaster effect of a lot of ups and a lot of downs. And just being able to hang in there and still be an entrepreneur, still investing in companies and still caring about people who want to do the same is pretty remarkable.
No, I appreciate that. It's just what it's always driven me. I've always, been a business owner, even going back to having a landscaping business in high school. My father was a business owner, and he credits that with a lot of the success, he achieved. He's retired now, but he was in the medical field, a surgeon, but, was a partner owner of all the businesses and the surrounding businesses in there. And then also had some diversification in other businesses that he owned along the way that, kind of helped build his success. So it's just maybe a little bit in the blood, a little bit how taught growing up. Very fortunate to have that background and, to learn as you age from being a little baby up until, I guess we're adults now. But also, I think what always connects with me is, I guess I never really thought of myself as being an entrepreneur, business owner. But I remember in college, I became a father and I wanted to finish school, finish my degree. And I was out there looking for regular jobs, even just kind of small part-time jobs to make some money while I finished school. And, I realized pretty quickly that the rest of the world didn't care about my other obligations and to say, hey, you can't just show up when you want to show up for a couple hours here and there. So I had to kind of figure out a way to make some money on my schedule, my time to provide for a family. And it kind of led me down that path a little bit.
Most definitely. you can get some from genetics, but you still got to take the risk, right? So that's not always built in.
No, absolutely. It's the, people hear about business failure rates that are being very high, and there's
Hmm.
always debating statistics on it, but there's a lot of, um, for every success story you hear, there's a lot of failures, and a lot of time those failures go, unrecognized, unnoticed, untalked about, and, 'cause nobody wants to talk about bad news.
That's right.
But a lot of people run into problems starting a business in terms of where they end up. So sometimes the risk you take to start a business, life goes on. The sun will come up the next day. You have to make the next day
Hmm.
better, as anyone would say. But there's certain scars that people can carry with them for many many years, or even permanently. There are some business losses that will put you off of trajectory, sometimes almost permanently, of where you maybe want to go. And that sounds a little negative, but again, you have to recognize those risks. But end of the day, there's a lot of rewards, success, and autonomy, and other flexibility you have pursuing that role.
Most definitely. And actually, that leads me to my first question for you. I think you have had such a roller coaster of events play out in your career so far, both wildly great and some, really learning the hard lesson of what it is to be an entrepreneur. That I thought, well, maybe we could spend some time talking about common problems that you've seen, both in your own businesses and businesses that you've advised, businesses that you've invested in. What are the things that you see most commonly that small business owners or CEOs the mistakes that they make, right? Why they don't grow as fast as they would like, or maybe not grow as fast as the next company.
No, it's a great question, and it's actually, the answer is, can be somewhat complicated based on the situation, and
Hmm.
where things are, where the industry is, what the economy looks like. So there's really no great answer. If you go back to if you look at the long-term investing of things, buying houses in 2007 or real estate in 2007 was probably a difficult, bad move, but it was a great move in
Hmm.
2009, right? A lot of people lost a lot in 2007 betting on real estate, but certainly if they bet on it in 2009, going against the grain, they did pretty well. But again, just a couple year difference in the industry and the economy makes all the
Hmm.
difference. So there's no one
Hmm.
size fits all. Something that I've seen a lot these days, particularly with the attention startups have gotten, and entrepreneurship has gotten, it's become more mainstream. A lot of entrepreneurs, they focus on the capital raising process. We're so taken by stories of companies that grow and get a lot of funding, and then have a big cash out, and everyone becomes kind of filthy rich, and those certainly happen, but they're few and far between. But one thing that I see a lot of entrepreneurs doing is they spend a lot of time seeking capital, seeking funding through a variety of ways, but they're not focusing on providing a service, addressing an opening in the market. A basic way
Hmm.
of saying it, you ask someone, why are you starting a business? A lot of times someone will say, well, I want to make some money. We got to make some money. We all have to make money to pay some bills and accomplish what we want to
Definitely.
accomplish. But there's there's a lot of distraction around that. And I think one quick story on that, there was someone had a poll on LinkedIn the other day, and they were saying, what's the best skill that an entrepreneur, a founder needs, right? And he said, well, is it business savvy, being able to find customers, have good operations? Is it leadership, building the right team and inspiring others? Or is it storytelling and the like of fundraising, right? Basically saying things
Hmm.
the right way to get people excited. And certainly we do need to communicate our value to people, whether you're trying to raise money from an investor or whether you're just trying to sell a service to a client, whether that's an expensive piece of software or someone coming to do some landscaping. You do need to be able to communicate the value of your business to that customer. But a lot of people are focusing, oh, I can tell a great story. I can get people excited. I can, sell the vision. Well, that's is a piece of it, but if that's all you have going on, you're going to run into some troubles. And I always like to use the examples of WeWork and Theranos, two companies with very great storytellers that told a lot of
Right.
stories, right? I think sometimes storyteller has the thought of being someone that's not being honest, and you saw what happened to
Yeah, that's
those.
a
They
great
ended up
example.
folding, and but I think just focusing too much on that storytelling, on how do I get money, how do I raise money, how do I get investors, how do I make money, that becomes an obstacle that a lot of business owners, entrepreneurs have to overcome to ultimately succeed.
Most definitely. I think that's really good for you know startup founders, entrepreneurs, and even those from my side, I've seen quote unquote business owner entrepreneurs that think they're business owner entrepreneurs, but essentially what they've done is they took out a big loan through SBA and they bought a company, and they were really good at doing that, right? But now they actually have to operate that company. They actually have to do sales in that company and marketing in that company and hire and fire people and cast a vision and all these other things. And they're not really good at that. So to your point of the storytelling part, I think for these small growing companies, it's you have to be sort of self-aware to know, okay, what am I good at? And how can I see that playing out, right? If I'm good at putting together pitch decks, well, maybe I should be a pitch deck consultant, right? I heard they make pretty good money. And and move to Palo Alto and just, get paid $10,000 per pitch deck or whatever they're paying these days. Or if if I successfully bought, and even strategically bought, a $1-2 million small company. Well, now what? Okay. I mean, do I have the background, the ability to grow it? And if I don't, and maybe you don't figure that out until you get into it. So there's that. Maybe there's someone in that situation right now. It's surrounding yourself with the right people to know, what to do next. So I think that's really good, insight. So if that's one thing, telling stories, right? And I agree. I'm in marketing. I like telling stories, right? That's a big deal, right? You have to communicate stuff very well, and you have to convince people that what you have is the best. Hopefully, it is on the back end, right? To your point, what are some other things that you've seen with small companies? Some mistakes they make, or maybe some sort of main reasons why they aren't growing as fast as they'd like. Let's say they have a company, it's doing, I don't know, 1 to 5 million in revenue. It depends on industry, what that actually looks like as a small company. And now they're looking to scale up and grow. What are some of the things you see them not doing that they should be doing?
I think sometimes what owners aren't doing or founders aren't doing is they're not really taking inventory as to what they really want the end game to be for them. And some illustrations of that, I know people that that are founders of companies, and they've had some great ideas, some great business. They've actually been successful operating a viable business. But when they started it, they're like, hey, we're going to go make $100 million, $1 billion off this. We've got a big problem here to solve. We're going to make things happen. And then they raise a little bit of money. They get the business to a point where it's viable, it's producing, maybe some income, and the days of them earning zero or minimum wage salaries, as many founders do to start, are gone, and their salaries are 200, 300, $400,000 a year, which it can be a pretty good living in most parts of this country and certainly the world. And some of that kind of hunger goes away, right?
Right.
And they say, well, I'm feeling pretty good about what I've done. Well, hey, I thought you wanted to make $100 million. I thought you wanted to grow this thing and kind of change the world and have, certainly receive the financial rewards that go along with that. Yeah, I don't know. I don't think so.
Right.
And that's okay because we can change and evolve. Circumstances change, families, health, priorities. But I think a lot of entrepreneurs and business owners aren't really honest with themselves from the get go. They say they want to get there, but really they just want to kind of build a business that creates maybe the lifestyle they want. Others, want to just be a one-man show. They don't want to hire people, right? They just say, hey, I'm fine as just, if I can get to a point where I'm, billing out 6 to 8 hours a day at a big hourly rate, doing, selling my expertise or my knowledge, then hey, that's good enough for me. Others, don't think about the possibility of what an expansion looks like. So I
Hmm.
think it's real important to kind of have a game plan, an end game for yourself personally with your friends and your family, those around you that you care, to say, where is this thing going to take me? Because if you don't, you kind of end up not pursuing the original purpose that you were going after. And that's sometimes, if it's your business, okay, but that can have real kind of implications for employees and even yourself. A couple great examples. The company MailChimp, very popular email marketing newsletter
Hmm.
software. They had, it was owned by, I think, two gentlemen, and they said, we're never selling this thing. We're never selling it. So the employees never really, some ask, I want stock, I want to own part of it, I want to buy in because I love this place. We don't really do that. They were paying pretty well, but maybe not as well as they had to because, look, we're not going anywhere. This is going to be forever. This is
Right.
family.
Right.
So they said they were never going to sell it. But, Intuit came around and offered $4 billion. And they said, that's enough for me. That's enough to change my mind to sell this thing and to be done with it. What the future of that organization, the employees there look like is kind of different. But all these employees are like, look, you changed your mind and you're entitled to do that. But now I've got to go and, figure out something because my guess would be some positions would be eliminated due to redundancy in that deal, even though people were like, hey, I gave up, so much of my time to be with you there.
Hmm.
Another thing that I can relate to personal story is sometimes maybe the paralysis to hire as quickly as you should. And, as a business owner, if you're trying to grow it and get beyond a certain spot, getting beyond the owner operator sort of piece, you say, well, hey, man, you should probably hire someone to do whatever, to go check the mail for you, to, take your phone calls, to be where you can't be at all times. Yeah, I don't really want to pay that person because that's kind of coming out of my pocket. That's fair because you can, certainly you can have a great one-man show and be extremely successful for yourself. But if you're trying to grow it, the longer you delay in hiring people and letting go of certain things, the more your talents kind of get into the core of that business and its operations to the
Hmm.
point where at some point it's almost you can't get them out. It becomes like
Hmm.
fused together, right? And all of a sudden that might make it more difficult to bring someone on, to spend the time that you need to with the new person, to take on new responsibilities, to free up your time, to even sell the business, to bring on a partner. So I think it's just about being honest from the get-go. Is what do you really want out of this for
Hmm.
yourself and for those around you? It's ultimately what really matters. If you don't answer that or you're not honest, you're going to probably upset a lot of people along the way. Example: if you took investor money and you say we're going to become the next Facebook and go to $1 billion valuation, and then you start paying yourself $250,000 a year and say, well, it's cool, right? Wait a second. I own half this thing and it's worthless, but you've got a good lifestyle and you got a good, when do I get my money out of it? Right? What's it worth?
Hmm.
Yeah, probably shouldn't have taken that investment. Okay. You got a tough conversation to have with your investors at some point. If you're trying to get to a point where you're building your business, sacrificing time with your friends and family, and you don't really figure out a way to let go, all of a sudden you spend all your time away from your friends and family as the business grows and sustains over many years, and that's got implications. So I think just being honest about what you want from the get-go, and there's a lot of success. There's a lot of people that have become billionaires or raised a lot of money that have been successful. I got into a debate the other day about it. They said, oh, one man shows and owner operator businesses, oh, they're not scalable, there's no wealth being created there. It's just not true. The bulk of the wealth and income in this country held by a small percentage of people is not been done through venture backed stuff. It's not been done through raising capital. It's small businesses. A lot of times with the owner or the family extremely hands on,
Hmm.
making things happen. So I said, there's no wrong way to do it, but if you're not honest with yourself from the get go, you're going to go down a path where you're going to have to back out with some painful decisions and effort investment along the way. So just be honest with yourself from the get-go about what is it you really want out of it. And I know this is a lot to consume, but if you say, look, I want to grow a business and sell it and make it big because I kind of like the building and the excitement around that, do that. If you say, look, I just want to be able to, get to a point where I can work 3-4 hours a day and spend the rest of my family and friends and pursue my hobbies in the afternoons, but also have a pretty good lifestyle, then that's completely fine too. If it's the latter, you don't need to be telling investors we're going to go to the moon and be worth hundreds of millions and take their money. Right. So if you're trying to build a business and scale it to be the next thing, you don't have to tell people, well, I'm not going to hire. We got to keep things really, really controlled cost wise. No, you need to let things go. So just be honest with yourself from the get go.
Yeah, I like that a lot. I think there's a lot of merit. And for the person listening right now who may be in that situation specifically where they're kind of lost track of where they're headed, a natural, practical next step for them, would that be looking internally, that introspectively, and saying, okay, what is this all about? What am I doing for me and my family or for my loved ones or whatever? Is that a good place to start, or should they be looking at it from a business standpoint first?
I think I'm going to borrow two kind of maybe overused phrases, that I kind of heard during, maybe they're a little academic, but, kind of learned them in my graduate school. But I'm sure a lot of people have heard these things before. If you really want to get to the bottom of a challenge, you got to focus on the root, not the fruit of the problem. And that sounds really cliche, but, if there's an underlying challenge you have to get to, example, if you're like, geez, we're not generating enough revenue. I need to hire more salespeople. Well, maybe, but it's probably, do we have the right product, the right pricing, are we in the right market? The other one too is, you need to spend more time working on the business instead of in the business, right? We all can,
Sure.
not see the forest through the trees, right? So you have to sometimes take yourself out of the business and say, all right, I need to work on it. I need to look at it externally, this whole business, rather than being kind of stuck in the middle of it, head in the sand, getting stuff done, even if you're real successful, but work on it, look from the outside and say, okay, I've got a round hole and a square peg here, as the old adage says. Wow, but my business, I'm trying to get to where I can put it into a round hole, but it's a square. How do I then work on the business to make it so it fits there? And that takes, kind of stepping back and looking at things from, a perspective of not being involved in the business, right? What are the real challenges? What's really causing them? The 5 whys is a great exercise. You just keep asking yourself why and why and why until you get to a point. Or the thought of saying, how do I look at this as an outsider? What would an outsider say? What would I tell a close friend who came to me with the same problem? What advice would I give that person? And I think that holds true in a lot of things in our lives, relationships, finances, business. But you kind of have to put yourself that way. And then you say, well, I would tell my friend you need to do X, Y, and Z to grow the business. You might say as a business owner, I can't do that. It's ridiculous. But why would you tell your friend that? Well, that's the best advice. Well, you might need to, learn to take your own advice, right?
Most definitely. Yeah. It's funny we're talking about this too, because a lot of the way I look at what I do as a consultant is just being the most honest person in the room, right? To an extent, some people, they can't take a brutal honesty, so you have to kind of sugarcoat it a little bit. But, being the outside voice that comes in and brings an outside objective perspective, I would add to that, that sometimes bringing in consultants that are so you're thinking about this personally, and where do I want to go with my own personal vision, and where am I taking this? What does it mean to me? Okay, well then when you start to look at maybe step 3, what does my business now look like in line with that? Well, maybe you need to bring somebody in that's focused on a particular area that can speak objectively into that area to help you maybe move past a barrier or something that may have been a barrier in the past, in a certain area that maybe you're not strong at. So, from a consulting standpoint, that always rings true to me. And I think small business owners, having a vision of what you're trying to achieve personally, it always trumps everything else, because if you go to work every day on mission to achieve that vision, you're more motivated. You're going to bring all of your people up around it. people are going to leave or cleave to that vision. There's a lot of things that go into having that frame of mind that is clear. Switching gears to the financial side, a lot of business owners who have started their own company, they own 100%. They're looking to scale up or grow. They may be looking for investment, right? The last episode I had Ryan James from Surety Bank talk a lot about taking on debt, at appropriate times where you're looking to expand. It makes sense. You take on this debt, it's going to help you make money, and then you can pay it off over time. And we talked a lot about that. So on the investment side, if you're looking at taking on equity or equity partners, how can owners be smart about what they give away? And when would it make sense?
Yeah, no, I mean, that's a super important question. And, there's nothing more frustrating, I think, for anyone than for paying for something and not getting the value out of it, right? I mean, if you go to a restaurant, you order a steak, and you end up getting a bag of chips and they charge you for the steak, I think that might put a lot of people mentally into a tailspin, myself included, right? It's certainly, to grow and to succeed, you always need the help of others in some way, right? You need other people involved to help your business succeed. And certainly the baseline, you can just hire people to do that. You can hire employees, you can hire contractors to help with whatever needs you have. But a lot of times, you need people that have kind of a vested interest in something to make work. I'll borrow a story from my dad. Him and his partners owned a surgery center, and with the surgery center, they certainly would. The way it works is you do the procedure. There's insurance codes you get billed out for doing the procedure. Whichever doctor did that work got compensated for their time. But there's always like kind of excess things around it, right, that go along with things to actually provide the treatment. Some of the things which the doctors cannot provide, some of the administrative support, those then get billed to insurance, but then there's obviously this little bit of extra pot left over, which they could share amongst themselves, and that's been a pretty successful venture for those involved. The interesting is it would be impossible for one person to actually own and operate the surgery center and actually have the success to the point where it was worth kind of growing. It's just the scale of it. You needed more people to drive more procedures. There's not enough procedures in the day to actually own your own surgery center and say, I own 100% and I only do my things in here, right? It's like you might as well just say, no, I might as well just not be involved. Let me just go to a surgery center. I'll rent the space. I'll just pay the fee they'll pay. I'll just get paid for my time. Completely reasonable. But you need a handful of people in it to actually make it work and to kind of keep the machine going, particularly with the support staff it needs. So I think you have to always consider how you bring on partners and investment into your business. With that being said, bringing on the wrong partners, and even in a small way, can be extremely damaging to the business and then to the ultimate value. Two stories on that. One of them is one company was started by three gentlemen. They raised some money along the way. They probably look back and said, we probably didn't need to raise as much as we thought. You live and learn, trying to grow. At some point, they brought on a CEO from the outside. During that CEO's tenure, the business did not grow. The business took on a lot of debt. The company was, even after an acquisition, the company was still smaller, right? And then it sold. And the CEO walked out with more than the three founders, who went on to other things. So maybe it wasn't terrible. They had other horses in the race. They were working other things. So it's like, hey, I didn't do anything. I had a check in the mail. Okay, great. But wait a second. The three of you built this thing to a point. From three of you to 1,000 employees, and then you brought in a professional manager to help manage it. A difficult job to say the least. And maybe it was an impossible job, right? But during that time, the revenues declined. There was no debt when he joined. Now there was a bunch of debt, and then he did get the deal done to sell it. But wait a second. Wait a second. You're walking out with more than the three owners. How'd that happen? Right? Like, you don't get a lot of opportunities there, right? So if they could look back and say, geez, we probably should not have awarded this person as much stock, or the stock the way we did. Maybe that's what it took to get it done. Something's better than nothing, but that's an expensive proposition. A venture I was a part of, a second business here that did not succeed, that actually was extremely costly to me financially, mentally, physically. I was excited about bringing on a couple partners. They wanted to be a part of this thing. The values didn't align at the end of the day, and that was extremely costly for me. I was end up asked to leave the company, and meanwhile, what they never understood was we had responsibility to our shareholders and owners. Which I was one of, they were one of them. But I gave up 2/3 of the company to these gentlemen. Well, a little, I guess, less because we had investors. I would say the investors owned 35% of it, and then each of us owned about 20% of it. I was one of the investors in the 35%, so I had maybe a little extra, but together they owned 40% of it, and it went to zero. And I think if we would have been more responsible about who we brought in and whatnot, who knows where we're going to go. It was an opportunity of a lifetime, if you ask me, right, with the surrounding details of it. And it just didn't work. But talk about an expensive proposition, right? And so what happened for me is, the two of them said, well, I'm going to just go back. And they went back to their regular jobs, getting paid what they want to get paid. And, I was kind of stuck holding the bag financially on things, and had to kind of reset and reboot, all because, I was too anxious to bring on partners. I was too anxious to give up equity in the business. We were going back, almost 10 years now when we started it. We were one of the first doing the type of business we were. If we would have been around today, we would have said, hey, we're one of the first. We could have been very successful, but who has that foresight sometimes? So I think you do have to be very, very careful, because bringing on the wrong investors, the wrong partners can be one of the most expensive mistakes you ever make. You can even have it work out where you make some money, but wait a second, why did I make X and this other person made 5X? They weren't even there. Well, that's just how the deal worked. Well, wait a second, I need 5X for my plans, my personal finances. Well, sorry, someone else got it and they put in a lot less time than you, and they didn't do as well as you did. Oh, deal's a deal, right? So I think you do have to be extremely selective and careful about when you take on investors, whether it's a partner, whether it's a venture capital investor in startup mode, whether it's just maybe someone that wants to say, look, I want to give you some seed money. You need to really be careful about who you're partnering with, because it can end up being the most expensive mistake, even if things are successful.
That's funny, because I didn't expect that as the answer. Actually, I thought you were going to be more tactical on the financial side of, percentages and that kind of thing. But I guess if visions and value aren't aligned, then it doesn't matter if you have 90% or 2%, because it's not going to work.
That's right. Yeah, it starts there for sure. Alignment of values, vision, purpose. You need to be different if you're bringing on investors or partners, whether they're active investors, they're actively in the business, or they're just writing you a check. You want to have, the old 1 + 1 = 3. You want to be better together than you are, alone. And that's in any situation. There's certainly a time to talk percentages. I've kind of recognized that to really have people feeling good, it's not about how do I keep as much for myself as possible. You've got to be open-minded. So here's an example of one deal that I know I was involved in. A company was acquired, and the investors had what's called a liquidation preference, meaning that first they get all their money back that they put in, and then everyone shares in what's left, including these investors with this liquidation preference. So example, if an investor put in $10 million, and let's say there were 4 owners, 3 individuals at 25% and this investor at 25%, and then the company sold for $10 million, that investor has the right to exercise his or her liquidation preference, say, well, I get $10 million and I guess we're splitting the rest 0. Wait a second, So that can happen, but in this particular deal, a deal like that came up where there was a purchase price, let's call it 10 million, and the liquidation preference was 10 million. The investor's liquidation preference actually forgo. He said, I don't need, I'm not going to do the 10 million, right? He's like, We all worked on this. I'm taking the loss. We didn't, everyone lost on it. So he forego that. He kind of eliminated that. And that sounded stupid because wait a second, like, come on, man. Like, you're leaving all this money on the table, right? But he's a professional investor, and he's like, the relationships are important. Here's people I worked with that grew a business. I may want to work with them again, right? They may want to work with me again. And if you've kind of muddied the waters and did kind of a deal where it's I can get as much as I can get, then you're probably going to burn some bridges on the way, and sometimes you have to. But that was, and I talked to my uncle about that deal, and I said, "Is this common?" And he goes, "Oh yeah, it happens a lot, particularly when an investor wants to continue a good relationship with the people he or she invested in." So I think when you come down to percentages and get technical about it, it varies tremendously by business. Valuations, what people want of it, but you do want to create a landscape and platform that everyone feels good about. But if you don't start with matching the values and the purpose and making sure the milestones are set that, you can earn into this effectively as we get to point A, B, and C, you can end up, really forking out, a lot of extra money that you didn't want to. I mean, a famous example of it is Facebook, right? Mark Zuckerberg, commonly was, let's start this business. Oh yeah, I'll cut you in on half of it. Yeah, I'll do this. Oh yeah, we're partners. I'll give you some stock. And then, you always say that at first because it's not worth anything, right? All of a sudden it was worth something, and he tried to renege on his deal. And it's not even an opinion about what happened. It went to court, and he lost, and he had to.
The
Well, the Winklevoss twins, and there was the other guy. What is his name? Eduardo Sarin, I think. But he ended up with billions of stock because he said, "Look, he promised me this. Here's the proof." He won in court, and it's just like, Facebook can afford it. You don't need, how much money do you really need, all that stuff. But wait a second. There was a lot to go around, but sometimes there's not a lot to go around. And if you kind of promise things to people that you really didn't have any intention of honoring, if something really succeeded, you need to rethink the deal. But it is, you want to be fair to people. You want to give them a chance to succeed when you're structuring these deals, but you also want to make it so, nobody is walking out with something. Maybe the best illustration is a friend and I, we go out and we watch games sometimes, have a couple beers, and we just we just share the check. Like one time I get it, the next time he gets it, right? Vice versa. Someone's probably ahead by a few dollars, right? Someone, you know what I mean? It's like, if you took up the hundreds of receipts we've kind of, shared through the years, and you tallied them up, someone's probably ahead by a few dollars, but it's not monumental.
As long as it's not monumental, that works,
that's
right?
Exactly right. There's no way it could be, because it's kind of like it's a fair scenario. Hey man, you pay this time, I'll pay next.
That's right.
Back and forth, right? And but all of a sudden, if we were to go calculate it and said, oh well, geez, you've got $17 on me, you wouldn't feel like, you wouldn't feel kind of violated about that. You'd kind of laugh about it. Where if it came out, where if you found out the person was in that scenario, say I was doing, would say that I'd say, well, hey man, every time we go out and I pay, we're going to go to McDonald's, and every time you pay, we're going to go to Capitol Grill. If it's kind of a fancy steakhouse restaurant, and we're just kind of and I was trying to weigh that to my side. Well, that's probably not a good deal, and that's what you have to kind of look out for if that story makes sense.
Totally. So I had one more thing that I wanted to talk with you about before we head out, and I think it kind of nests real naturally to this conversation of, you're trying to grow, maybe you take on some debt for expansion, maybe you are looking for a partner, but then, through this introspective, vision casting new self of yours as a business owner, you're trying to say, okay, where am I headed, right? And what do I need to help me get there? We've talked about a lot of different solutions. One solution that could be very much on the table if partners are not, because there's not any in your sphere of influence, or you can't find anybody that really, aligns with your values or vision, is hiring strategic key people, right? So if we talked about a company hiring someone strategically, or just the next new key person that is going to fill that role, like I talked about a consultant filling for a period of time, what are some key hires that you've seen companies take on that have filled, notable roles, and what did that timing look like? Or again, that's kind of the second stage.
No,
Growth.
very. I've got some kind of personal opinions, and I'll share some of others. Some people far
Yeah.
more accomplished than me. So, it varies based on your business. There's a very successful entrepreneur, David Cummings, out of Atlanta, very famous. He
Hmm.
bootstrapped his company, sold to Salesforce, founder of the Atlanta Tech Village. He is a big fan of, especially again, it's more geared towards software as a service companies, but he's a big fan of what he calls a sales assistant. And this is
Yeah. Okay.
a junior person. This should be the founder's first hire, right? And this is someone that can, it's not necessarily an entry level, it's not a low skill job, it's someone to kind of help fill the pipeline of sales, because originally he says, hey, initially the founder's doing all the sales. And he's saying it's very tempting to go and you're growing, but to hire a vice president of sales, big strategic sales leader, sales manager, it's certainly, very capable, very knowledgeable. It just may be too early sometimes. So he says hire a sales assistant, $20 an hour, 25 an hour, maybe a little more, a little less, maybe some incentive. But that person's job is to kind of fill up the pipeline, right? Keeping, because the founder should be at that point, doesn't need to be chasing deals left and right. The founder should be just
Hmm.
closing the deals, if even that. So that's a
Hmm.
great example of kind of a first hire. Some people say, hey, you really need to bring in someone that will be really great at helping you um, monitor the books, a controller to some degree, if it's outsourced, where's the money going? It sounds like you have a lot coming in, but, a common theme among entrepreneurs that raise $1 million, they say, oh, this will last us forever. It's gone in 6 months, right? It's, but someone to kind of
Right.
help with, financial reporting, to kind of put that in perspective, depending on your size. I mean, there's lots of possibilities, and maybe you can hire kind of kind of goes along with the sales assistant, kind of an executive assistant,
Hmm.
kind of an early
Hmm.
stage chief of staff. Harvard Business Review's got a good article on the 3 levels of a chief of staff, 3 being super strategic, expert, 1
Hmm.
being kind of blocking and tackling. But those all maybe make a lot of sense to look at. Some people would argue nowadays, hey, you need someone that's human resources, even if it's just kind of part-time or contract, to help shape up the hiring strategy for growth. I know one startup, and they've done very well. They've raised some money, and they actually have like a pretty senior human resources vice president of people. That was a hire they did before vice president of marketing, before vice president of sales, before vice president of product development. The founders definitely had some had a lot of expertise, but they said we're gonna have to. That's gonna be our big challenge as people, right? So I think what you want to do is you want to look at your business, and again, going back to being honest of where you want it to be. You want to grow and raise a lot of money. Do you want to have the lifestyle business where you're working 3 hours a day and the rest of the time you're doing what you want to do?
Hmm.
What are the important levers and pieces that can really make a difference, and that will determine who to best hire. But again, all those people should also have shared values. They can have different perspectives on things. They can have different opinions. You may not even agree or even kind of like these people, if that makes sense. But as long as the values and commitment to the purpose is there, you can usually find good people. But it does vary from place to place, and again, depends on the business. But again, look at your personal goals, and then look at the levers of the business. What are the things that make the business move, and what are going to be the business's big challenges in terms of horsepower, or more importantly, maybe easier to think about if you're the founder, the business owner, and if you found yourself running at 10,000 RPMs, 12 hours a day, apart from the risk of burning out, you're not going to have any time whatsoever to capitalize on new opportunities. So you might look at that and say, okay, I'm real busy right now. We're all busy. If the dream opportunity came around today, whether that be the big investor we were chasing, the big customer, the big partnership deal, the new product development we have to do, and I need to be involved in that, and I don't have the time to be involved in that, what do I need to get off my plate to allow me to pursue that opportunity? And that might be some inspiration to find the right role for the first hire. And maybe an anecdotal example, if your team's growing and you got, say, a big call center or a warehouse, and you're the one that's looking at resumes all day, that might make sense to to bring on someone in HR, right, to say, why don't you kind of start taking that, because I spend half my day reading resumes and doing interviews, right? Meanwhile, I can't get to the meeting with their next big customer because I'm doing interviews all day. If the thing is, well, geez, I'm spending all day handling customer service requests, or the clients are coming in, hey, this is buggy, this isn't working, then you might need an operations specialist, operations manager, right? Otherwise, you say, look, I can't get to you today, Mr. or Miss New Opportunity, because my head's in the sand responding to emails. So I think try to do that exercise, and I think that's a way to make some traction in determining who you should hire functionally.
I agree, and I love that that idea of VP of people, because every company is built with a great team, right? And I think some businesses more than others need that emphasis or focus. And as you're talking, I'm sort of nodding my head to all of these things, and I agree mostly. The fact that every business is different, the way you're approaching building it is different. So there's not one size fits all kind of thing. Some companies, like a SaaS company, may be really heavily focused on product and people. But, for your typical small growing company, there's a lot of operational components. I see at that second stage, a lot of systems that need to be put in place so that if you're looking to be bought, let's say you want to sell your company in 5 years, 3 years, it's going to increase the value of what you're worth to an investor or to an investment group, because they're looking at, say, oh, they have all their ducks in a row. It looks like they know how to make money. They know how to, serve their customer. They know how to market their product and tell a good story. They have all these factors in place. And to me, what it screams is COO. From a systematic standpoint, that initial maybe uncomfortable hire, maybe someone with a track record of installing systems from an operational standpoint, so you operate more efficiently, can keep the customers you currently have. So now you can go off and start bringing in new customers, while that person's overseeing the more sort of president operations role. But yeah, no, I mean, I think it is unique to the owner and the business that they're in. But the key thing that's coming out to me is being in tune with what you're driving towards, and then hiring around, even if it's maybe an uncomfortable hire, around those weaknesses.
That's exactly right, and your goals. And I'll just add one story, kind of just a memory that came back. I was back in my early days. I was doing, going back 20 years. Again, a lot of the technology services our business does is, websites, e-commerce development, programming. And when we first started, I was doing all the work. I was doing the graphic design. I was doing the programming. I was writing the code. And why not, right? Hey, pay X amount of dollars to build me a website or design me a brochure. Why wouldn't I do that myself? Charge a good price, get it done. A gentleman that I was working with, he kind of observed that, and he's like, do you want to be a coder, or do you want to be a businessman? And I said, well, I think I want to be a businessman, right? But he's like, you're gonna have to stop writing all the code yourself, right? Because and you see it in a lot of firms, right? I kind of realized, like, if I was busy because I knew something was going to take me 40 hours of code to write, apart from other sorts of, business ownership responsibilities, if someone called me Monday and said, hey, can you do some work for me? Well, I'm kind of busy the next 3 weeks, so why don't we talk in like a month? Ah, well, wait a second, right? Like, okay, that's fine. We're all busy. You all get backed up, right? So be it. But you might be missing opportunities. So, but I had to make a conscious decision to say, all right, I'm going to move away from the hands-on technology work, focus on the business side of things, building relationships with clients, carrying the message. I could still get my hands dirty a little bit with coding, but you don't want me coding or graphic designing anything today, especially with all the talent out there, right?
No,
So, but
yeah,
some people
and
say,
it's a
look,
great place to start out because
yes,
again, you're at the ground floor
that's
and you
right.
can manage more effectively.
That's right.
But I think at some point you got to know the decisions you're going to make moving forward are predicated on where you're headed.
That's right.
So where are you headed?
That's right.
All right, so I've got one final question for you, but first I wanted to ask, and that's a short one, but I wanted to ask you about resources. So, in your world, where do you go to learn? What are some maybe books or podcasts or people you follow that would be valuable to a small company?
I read a lot, so
Mm-hmm.
and again, it varies kind of on your personality and kind of what you kind of you're struggling with, but I'm a big fan of at least for me, right? So here's one that's been good for
Sure,
me. The Robert Greene's books about the laws of power and the laws of war and the art of seduction. Those were really, really, they're great stories. They appealed to me because there's like little history bits in there, but also really
sure,
great lessons of things that I didn't have a lot of instruction in about. How to best effectively build relationships with people. Right, it's something I've worked really hard on. It's something that I wasn't born with this natural ability. Maybe people say there is no natural ability. I don't know. I've got a friend who's been my best friend since preschool, and man, this guy lights up a room when he walks in. Doesn't matter where it is. I just don't have that impact. People like me, I think, I get along friendly,
that
but
surprises
this,
me,
this guy
Terrence.
is
That
just, yeah, this
surprises me.
guy just is it's just incredible. But I've said, you don't have to necessarily, quote, light up a room that way, but you need to build relationships. So those books were really helpful, at least for me. I think, I like reading Barron's and the Wall Street Journal. I mean, those are really have great insights, especially the back pages of it. Right, it's rarely the cover story,
Okay,
right? Always little kind of insights about where things are going. I definitely recommend, whatever industry you're in, getting, finding some of the industry journals and kind of reading those. There's some stuff in there, it gets a little academic, but you find a lot of kind of useful trends about where things are going. And I certainly didn't call the COVID crisis by any means, right? But if you would have
sure.
read certain sort of journals, the whole story of COVID and how things would unfold if something like this happened, were all described. And certainly the kind of the end of the article, they said, well, how likely is this to happen? Well, it's pretty likely to happen in the next 10 or 15 years. They were off by like 5 years. So I think, I kind of like reading stuff to see where things are going to be, in the future, 3 to 5 years from now. That's, page from Jeff Bezos' book, build the business to serve what might be there 5 or 10 years from now versus today.
Right.
Um, there's I think you said maybe I should have a reading list, right, that I can share with people. But I've just found everyone is so different. Some people love podcasts, people love magazines, people love big books, people love fiction, nonfiction. So
Sure.
I think, but those are a few places that I kind of, um, you know, keep my eyes on to, consume, be knowledgeable, stay informed, look for new trends, and provide, hopefully, provide valuable insights to those I work with, colleagues, clients, and so forth.
Cool. And I know you're on LinkedIn a lot, so I'm going to tell people to go find you there, Terence Channon on
Oh, thank you.
LinkedIn, and follow you there because you have a lot of really good insights into articles that have been written, mostly in the startup world, financial world. But you kind of run the gamut. You comment on a lot of different things, which is really cool. Where else can they find you?
You can find me, let's say LinkedIn's good. If you go to saltminesadvisors.com, that's the website for the investment advisory business. That's a brand new launch. So, I mean, if anyone's listening to this and feels inclined to give some feedback or observations
Hmm.
on how we're trying to position this message out to the world, I certainly would welcome that. But that's, yeah, you could find me there. LinkedIn's good. Yeah, I think that's a good start, right?
Yeah,
That'd be it. So
yeah, I
that's
think that's good.
if you're not looking in those two places, then You may not be that. Maybe I'm not that interesting, right? That's okay.
You're not on TikTok?
No, no, but it's funny. I talked to someone the other day, and I don't want to get off topic too much, but I think it's a story worth sharing. I was at a little kind of small little social event, and they brought in a
Yeah.
couple speakers just to kind of add some value to this small group to say, hey, look, let's come have a good time, meet some people, have a drink, but also learn something. They brought in a gentleman who is this guy is an expert in fashion and personal branding and imaging, and he really got me thinking about how it's like you don't have to do anything you don't want to do. Like I don't have an
Mhm.
Instagram, I don't have a TikTok, and he's like, yeah, but everyone else does, right?
Yeah.
But he was an expert on kind of how to position yourself. And my goodness, you talk about an area that at least me I can use a lot of help in is, I mean, geez, this guy was so knowledgeable on everything. Even thinking about what you should really be intentional about. How you look, even if you're working at home when you're on a video conference, right? Not just taking
Yeah.
a shower, but you can put together an outfit as an example that can really
Yeah.
speak who you are and being authentic. Um, but he kind of opened my mind to say like, hey, maybe you do need to consider these places to engage and find these
Mhm.
potential new customers. So maybe I'll have an Instagram or a TikTok in the near future and give those a whirl.
Yeah, actually, just today I was thinking about TikTok for myself, and what I was thinking about doing is doing like a tactical TikTok is what I call it. So, marketing or sales tactics and just one tactic per post, right? I think a lot of people that's what they want is they wanted that easy to consume, quick, bite size, knowledge about how do I how do I use this platform in this way, right? Just very simple stuff that they can practically implement. So, yeah, I mean, you should look into it and maybe even start dancing. I don't know.
I think, yeah, maybe. I know, who I looked at the other day. There's a woman, her name's WhatMissExcel, I think.
I
She
don't know.
sells courses about Excel.
Oh
Yeah,
yeah, yeah,
you
yeah,
just
yeah, yeah,
you pay $100, or I think her courses are more actually, but you learn how to use Excel. They have introduction, beginners,
yeah.
advanced, and I think she does exorbitantly well. I mean, she's got a seven-figure, if not bigger, business selling these courses, and
Yeah.
apparently she generated a lot of interest from TikTok. And it was
Hmm.
weird because even though they said that, I just didn't feel compelled to go look at her TikTok. But I actually was like, maybe I should look at this. And
Yes.
I went and looked at it, and I was like, well, that's cool. Because I didn't really know what
Yeah.
to expect. I just wasn't sure what to expect in these TikToks. How could you sell Excel classes through TikTok, at least to this
Yeah.
significant scale? And her
Yeah.
videos were, there's nothing super fancy about them, but she
Hmm.
would, have a little like song or reading, and then she would kind of populate the TikTok with like little icons from Excel, like the colors, the
Hmm.
shading. So she would have a little kind of small, like little poem or little story or song about that, and then populate with elements from Excel. And it actually kind of made it seem these things kind of fun. And I
Sure.
was like, well, that's really cool, right? So,
Yeah. Very
yeah,
creative.
so I think that may be worth, I don't know. It's just like, I got to go check that out. And I was like, so how do you I think that's a good lesson to learn? How do you, whatever it is you're marketing, selling?
How do you translate what you're
Yeah,
doing to a platform like that or any
yeah,
platform, right? That's the
that's
question.
right. So anyway, she did okay. So, but yeah, I think there's a lot to learn there. I think that goes, you don't have to, you can't be everything to everyone, of course, but I
Hmm.
don't know. I kind of go back to a little lesson one time. Someone called me, selling products, and someone called me, and I'd say, yeah, all right, let's take your order. It was a good size order. And I'm like, yeah, Visa, MasterCard, American Express. He goes, you take Diners Club? Diners Club? Is that even a thing? And
Yeah.
and I'm like, hold on. So I got on the phone and called, the guy who did my merchant accounts, and I go, can I take Diners Club? And he said, why? And he go, I got a customer on the phone right now, and he goes, you want to take Diners Club? I'm like, yeah. It's the only Diners Club transaction I've ever processed, but it was interesting because you said to me, I always use that as a lesson to myself to say, hey, How do you want
Yeah.
to pay? Check, credit
Right.
card, bank transfer, PayPal. Let's make it easy, right? However is easy for
Yep.
you.
Right.
Same way with my customers. How can I send you information? Email, fax, mail, phone, video conference, FedEx, whatever it
Hmm.
is you want, right? Whatever is easiest for you, or I can give you suggestions. I'm not sure why I haven't been applying that the same way for where you can find you. Why aren't you on Instagram? Why aren't you on TikTok? Why aren't you in all
Yeah.
these
That's
social
an
networks?
interesting way to look
Because
at it.
some people say, look, I only use Instagram. I only use Snapchat.
Hmm.
You can't be everything to everyone, but being more accessible to everyone is not a bad idea. So I learned that today from our session here. Thank you.
We both learned it, right? Okay, one more question
Yes.
for you. If you could change the mind of a small business owner about anything, what would that be? And it doesn't have to be financial related.
So I've got two kind of stories on that. One of them is I remember in my graduate school class, we had an entrepreneurship class, and the professor said, "All right, give everyone a post-it," and and said, and she goes, "I want everyone to put write an answer. Are you an entrepreneur, right?" And I think the professor's goal was to have yes or no's and the kind of create. So I answered involuntarily. It was my answer. So she looks at it and was like, "In what?" And I'm like, "That's mine, right?" And I know a lot of people that I know that had great jobs, good salaries, good benefits, and they're like, "I want to go out on my own." And my first question was, "Why?" Right? So I'm
Yeah.
almost kind of a
Yeah.
little bit, not. I don't want to deter people from accomplishing and going what they want to do. I'm a little bit contrarian by nature, but I think again, this just goes back to being honest with yourself. It goes back to saying, you know, you know, the grass is greener on the other side kind of applies. It rarely
Hmm.
is. I actually saw that in real life one time driving through Okeechobee, and there was a cow eating grass with his head through the barbed wire.
From
I
the other
actually got
side.
out of the car and the grass was green on both sides. And I am actually like,
Yeah.
that's where that phrase comes from. And I'm like,
You're
I'm
now
like, hey,
selling
Mr.
that stock
Cow,
photo on
the
iStockphoto.com.
grass is completely fine there. It was
Yeah.
like, what are you doing? So I think it just comes down to if it's something that you really feel purposeful about, it accomplishes your personal goals. If that's the way to make it happen, I think that's where it has to start.
Sure.
I credit some of my success to being a business owner out of necessity. Where going back to college, where it's like, look, you can't come in and we can't have you 10 to 12 and 3 to 5 on Mondays, and then 8 to 11 and 6 to 9 on Tuesdays, and then when we can't do that. We need well, that's my classes are in the way, and they're like, I can't do that. Maybe
Right.
nowadays a little different in this world, right? But with remote work and whatnot, but I really had to, out of necessity, kind of find a path. So I think if you feel purposeful about something, connected to that, that's where you start. And again, my purpose for me at that time, especially it still rings true with me today, was providing for a family and being there while finishing school, which I felt was important. So I think if you kind of assess, I think a lot of people go into business. I'm going to make money. I want to be important. I'm tired of my boss, right? A lot of these reasons come out, or I'm so sick of being there. I'm sick of the traffic. Those are all real, and those can be considered. But if you're just going into business to try to, get away from a problem that you have, that maybe it can work, but I think the successful business owners say, how does this align with my vision for me? How does it serve my purpose?
Hmm.
And I think a lot of business owners fail to think of it that way. They see an opportunity to make money. They see an opportunity, oh my God, people are getting rich. They see an opportunity to
Hmm.
be my own boss. And those can be some of your drivers and values for sure. But I think a lot of business owners fail to kind of look at their values, their personal goals, what's important to them, and then how
Hmm.
does what's the best way to achieve that, right?
Hmm.
And maybe owning a business is. If it is, I think you've despite the risk involved and the turmoil and the hardships and high failure rates, then hey, that's your move. So
Right.
I think that's what you have to look at. If not, then you say, all right, I might need to find my, example, if you got a great job at a big salary, big company that you're not going anywhere, you say, I want to get rich, be a business owner. You might be better suited taking your high earnings and, maybe with some assistance, maybe not, but, investing in the right types of businesses.
Yeah. And I think just to recap all that, I would say it's got to, whatever your vision is, it's got to be, good enough to get you through the hard times. And you don't even know what those hard times are going to look like yet. So think 10 times worse than what you can think of.
Yeah, well said. 100% well said. Absolutely. No, it's absolutely.
Terrence, this has been great. You're my longest interview yet.
Oh.
So, and longest meaning most value.
Maybe we'll
because
see.
we've talked about a lot of
We'll
great
let the
stuff.
we'll let the listeners decide, but hopefully
Yeah.
brevity is not one of the skills I'm blessed with, but if but it's served me well in other ways. But if it's hopefully it's great for you, I enjoyed it, and I hope your listeners enjoy it too.
Thank you very much. And if you made it this far, please go leave a review. Then hopefully that will be a good
Or
review.
maybe
if you
they
made it
should
this
have the
far.
segments. You have to do the minutes and say, here from 5 to
Yeah.
10 we talk about this. I've done that with
Yeah.
podcasts. I've done this do a
Yeah,
lot. I
yeah,
said,
yeah,
all right.
yeah.
Someone said you got to listen to this podcast. Talks about the real estate market. It's an hour and a half. And what am I getting at? I don't have an hour and a half listeners. They said, well, the part about this. Okay, minutes 17 to 31. I can do that. Very cool.
Yeah. That's it. That's how we're
All
going
right.
to do it.
Thank
right.
you.
Hey, I really appreciate you tuning into this episode of Exploring Growth. I'm trying to get this in the hands of as many growing businesses as possible so they can take this practical wisdom and deploy it in their companies or with their teams. If you're getting some value out of this show and know someone who should listen as well, would you consider sharing it with them or leave a positive review on the platform in which you're listening or watching? YouTube audience, leave a comment below with something you liked or your perspective on what we discussed. I'm grateful for everyone that tunes in every week. Let's keep exploring.